who's here should get a prize because it's so late in the day. And you're still here. So thank you for listening to my short speech today. I'm an angel investor. I've been doing this for about 10 years. A group called AngelVest. We're based in Shanghai, Hong Kong, Singapore, and Beijing. We have 70 active members, primarily American expats living in the region. I personally have seen thousands of business plans. I've met with thousands of founding teams. We've only invested in 50 companies, so we're relatively selective. We're old school angel investors, so that's kind of our perspective. And what we're trying to do is we're trying to kind of take that and we're trying to kind of fast forward ourselves and accelerate ourselves into the blockchain space by doing our own ICO. And I'll tell you why that makes sense. Angel investing is painful. Who here has done angel investing? Who's an angel investor? Okay, one. Rainy, two. My friend in the back there. So only 2 angel investors make 10%. That's probably right for the audience, actually. And we know the pain points for angel investing. And but before I do that, I'm going to tell you about some of our deals, our kind of cornerstone deals that we've done. We did Hanson Robotics, the famous Sophia robot was my investment. It was my investment in Hanson Robotics that brought Dr. Hanson to Hong Kong. He created the Sophia robot. They launched the SingularityNet ICO back in January. They were very successful because they had the robot on the road. Sophia's gone on to become world famous in what she does. AppPro is a Boston-based biotech company. They filed for NASDAQ 2 weeks ago. They're probably going public next week. Our performance has been relatively okay on some of the better deals, 40% to 60% IRRs. So I think we've done a pretty good job of picking good deals. The established values that we're creating here is about trust. You know, it's all about people. We invest in entrepreneurs. We invest alongside other investors. It's all about establishing trust amongst the people that you work with. That is the most important thing. And democratic choice. We have a club. We have a club of 70 people, and it's about choice. Everybody gets to make his or her own investment choices. And thirdly, what I think we've done kind of interestingly well is innovation of structure, and I'll talk about that in a bit. So what are the pain points? The problem is that, you know, if you're a high net worth guy or gal and you want to invest in private equity, you know, or early stage investing, you have access. You can have access to these deals and you can put money in. You can become an LP in a fund, let's say. But what if you're the average Joe? You know, well, let's say your grandmother wants to invest, you know. How does she do so? How do you invest in a deal if you're just like an average person? That's painful, okay? The other point is that there are inherent issues with early stage investing. Issues of scale and exit. You know, typically the angel investment deal is 5 years, 7 years, 10 years. So liquidity becomes an issue. A lot of people want to put money in and they want to get money out in a couple of years, 1, 2, 3 years actually. So what we're trying to solve are some of these classic problems that angel investors have. What we aim to do is we want to build a marketplace. I mean, think about marketplaces that have become valuable. Think about Amazon, think about eBay, think about Alibaba. These are very valuable marketplaces that started on the basis of one vertical product. So our goal through an ICO is to create a marketplace of investment products, basically not just early stage investments, but also perhaps later stage or hedge fund-like products that we could offer to the average investor. So just a little quick background on angel investing 101. The pain point that angel investors face is that you have many investors and you have many deals. So everybody's got to do their own contract, right? I mean, you have basically every deal that you see there is got to be done by itself in terms of finding angel investors, and they've got to create their own contracts. That's kind of painful, actually. But the advantage is that you get to pick. So if you're angel number 3, you get to pick which deals you get to invest in, okay? You choose. Now, the traditional fund model, if you're a private equity guy or a venture capital guy, is that if you're lucky enough to run a fund, then you raise money from LPs. Raising a fund is painful. I know because I've done it before and it's quite painful. And to raise it from LPs, you got to go around, you know, knock on doors, raise money. But then the problem is if you're an LP, you don't get to pick. You're basically reliant upon the GP to pick your deals. And then it's not a centralized model. It's actually a centralized model. So a lot of people, if you're an individual investor, they don't want that because they want to pick their own deals. So what have we done? Actually, at AngelVest, we've created more of a hybrid kind of structure. And what we've done here is that we created a fund. It's a private equity structured fund, US dollar private equity fund in the Cayman Islands. And we have our members pick their own deals through special class shares. So it's through these special class shares that it still offers the angel investors individual and democratic choice, number one. But number two, the admin and back office aspect of the investment execution is done by the GP. So it offers the advantage of democratic selection, but the overhead of admin costs is actually done by the GP. So this is innovative. Why is that? Because it's a fund structure managed by the GP, but yet it offers democracy. So what do we want to do? As part of our ICO, AngelVest.io, our ambitions are to scale. So instead of having 70 investors, we want to scale to millions of investors. We want to have smart contracts out there. So basically, all the contracts that we see in this chart are going to be managed by the smart contract, managed by the blockchain. And number three, ubiquitous access. Ubiquitous access. Basically, anybody that wants to invest can invest their $10,000 in a deal and hopefully do okay on that. So the idea is to have not 70, but maybe 7 million investors. This I won't go into because we're short on time. This talks about the fact that we have a cost structure. The traditional means of doing investing, if we have 70 million users, the cost becomes prohibitive in terms of doing angel investing. So what we're trying to create here is a token economy. Basically, we're going to issue our AVT, AngelVest Technology Token. And essentially, if you're a token holder, you can use that to buy services from third-party providers. The idea is to make this token a transaction token. It won't be a security token. It'll be more of a utility token. And if you transact the token and there's more velocity behind it, the idea is that this token will become valuable over the course of time. So here's a bit about the team. Myself, I'm from the United States, been living in China for the last 12 years. Was a corporate guy that went into investment banking, and then doing AngelVest for about 10 years. We've seen, you know, I've done 25 deals for the fund. And my partner Joseph Wang, he's out there in the booth. Actually, he's an astrophysicist. He's got a PhD in astrophysics. And then we've got our advisory team, Rob and Nate, Miranda and Hassan, based in New York, helping us do our ICO. And here are token economics, raising $25 million, hard cap, and here's the breakdown. So here are some of the companies that we've done. Hanson Robotics, AppPro. We're global, so we've done many deals out of the United States, Europe, here in Greater China as well. You know, more companies that we've done. So it's the fact that we're taking the traditional model that we have, the group and the fund, and we're tokenizing it. So this operation's been around for 10 years, essentially, and we're taking the partnerships that we built globally, and we're leveraging that to scale further. So our model is we want to identify the right companies through curation, add value, and find a way to exit quickly for our companies. All right, questions? Sorry? That's not the goal, but certainly that could be a product that we can have on the platform. Yes, the idea is not to have just angel products, but also later stage products too. And also, for example, an FX trading platform, an algo trading platform that we're also running as well. So the idea is to find ways of de-risking angel investing. That's the goal because it's so painful. If we do an index, I think the advantage of people who hold the tokens is that you can trade tokens. So basically, instead of holding your investment for 5 years or 7 years, if you have a token in one deal, the idea is that eventually you can trade your token to somebody else and you can get liquidity on your token, actually. Yes. Well, that'll be phase two. So phase two is that we'll actually have those portfolio companies issue tokens in a security token form, actually. That was our initial idea. Yeah.
Question here. Yeah, how do you calculate performance? Because every LP would have a different performance, right?
Right. So it's unrealized performance, which means that we mark to the last round of valuation based on where we invested in. Then in terms of what the equity value is, then we can calculate what the IRR is based on the period of time that we invested in.
Meaning for the entire portfolio? So every LP has its own
on a per
portfolio,
deal
right?
basis. You're saying on a per deal basis or on the entire portfolio? If it's a portfolio, then you have to exit. Well, if the entire portfolio is based on the entire deals that we have. So if you look at this chart here, I show a sample. Okay, here. So the IRR here is if you look at the IRRs on these deals, it's basically calculated by the fact that you have this investment date and then what the most recent valuation is. You can imply the IRR on an unrealized basis, actually. Yeah. If you realize it, then obviously it becomes not just implied, but it becomes the actual IRR.